Good morning, everyone. It is September 10th, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice, and we are going to talk about a couple of hot spots in the markets today. Before we get into it, um, first, I just want to say, for anyone and for all of us, tomorrow's going to be a day of remembrance. Can you believe it's been 20 years? Kind of surreal. uh, what's gone on the last 20 years. But I don't know. It's going to be one of those days that we all remember, and not particularly in a good way. Um, like to see our country come together again like that, though. I hate for it to always have to be after something terrible happening, though. All right. With that, a little remembrance for September 11th. Let's jump into today. Before I jump into it, trading involves risk and may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what are we looking at today? High level. This is some news that we've got coming out. We are going to be talking about the Canadian dollar. Even though they had their unemployment rates come out, that's really not what's affecting the Canadian dollar. It's really, and we've also got PPI in the U.S. came out. We are getting some. You're seeing inflation is continuing to creep in, uh, creeping up. I mean, it's lower than it previously was, but it was higher than the forecast. It was slightly higher than the forecast. Prices are creeping up. But what are we going to talk about today? And it's oil. I mean, oil has been making. We actually called out some levels. I haven't touched my chart since yesterday, um, but if we come in here, oil made some crazy moves, and that's really where the volatility is in the markets. Part of this, there's a lot going on the supply side of the equation. On the supply side, China did come out and say that they were going to release some of their strategic reserves. On the same token, we got oil inventory out of the US yesterday, and we are getting some fairly significant volatility swings. And then overnight, when the European traders stepped in after some basing down below, oil has crept higher. So, yeah, we've got some things to talk about. So, with that, Brian, let's talk about oil. I think we could talk about on the heels of oil. I think we
Mhm.
could certainly be talking about uh, this this Canadian dollar. I don't know if this is so much Canadian dollar weakness as it is U.S. dollar strength and oil.
No,
Just
Canadian stress.
I'm sorry, Canadian strength or U.S. dollar weakness. I'm sorry, U.S. dollar weakness. I apologize.
Mhm.
Is it U.S. dollar weakness and the price of oil going higher, or is it about the Canadian dollar? But
Yep.
I'm going to flip it over to you
Sure.
because those are a couple of hot spots where things are moving. So if you're looking for these trading opportunities, this is where you
Mhm.
might want to focus today.
Yeah, it's a little bit more of an intertwined story today. I mean, the dollar CAD it was down 118 just a few minutes ago, but it's still down 105, solid right across the board as it should be. There has been great news for Canada this morning, and again, yet starting off yesterday is really where the story starts. We had a level there. We talked about it. The price took a bounce. Inventory was only down 1.5. The API number was actually even higher than that. And remember, I was mentioning that the forecast was way off. The other, API was at minus 3.2. It came in at minus like 2.6 or something like that.
Yeah.
It was pretty close. And then I mentioned this, and it's like, wait, this is like double, right? This was double the forecast. Like, very, very strange that they were that far off. And the number actually came in more similar, and again, lower actually than the API number. But again, still showing that it's not as much of a challenge draw as what they thought. Now, oil yesterday was all over the place. At 7:30 tomorrow, yesterday morning, and again, we hadn't seen what the news actually was yet. But this just shows you that the globe is truly, one large economy. This
Yeah.
push down was basically all based off of not. Whoops, not IDA. Sorry, I switched it over. Was again talking about this. What do they call it? It's the phases and batches in a rotating manner. So I guess oil gets stale in China. Here it is. It was something that was natural, but again, it caused a very, very large drop suddenly. And this is one of those things. And, I always talk about risk and managing risk. Had you been in a position assuming that, hey, listen, we're going to have this great number and not been watching the markets, whenever you have money in the market, it's technically at risk. If you're sitting in cash in your account and you're not doing anything with it right now, you're not necessarily at risk. So it's all about managing that risk. Who the heck knows when China's suddenly going to release a bunch of supply? But basically, the response was straight down, and then it came off that level where we saw buyers step in the past that we mentioned and shot right back up again. And I mentioned that yesterday was an 11 o'clock inventory report, which just also happened to be right at that price was sitting right at the 69.65, right at the oil inventory time. And again, we got that red printed number, and price shot all the way back down again, and then again has now hovered and actually used that same level of buyers to take back off again. So it's definitely been more of a kind of little bit of movement as prices kind of rallying back up again. And I think it makes sense. I mean, yeah, they released it, but then, we don't have as much as we did before. So it's, and then it comes back down again, because of the response. But then, and this is how it works. I was looking at the Chinese data, right? But then all of a sudden, the next one after that, it's got to be fair balance. And now they're talking about, hey, IDA is hitting the crude oil data. Now we're finally seeing what.
Right.
So it's a constant battle back and forth. And again, we talk about the consumer sentiment, why it's important. And again, not so much to trade with the consumer sentiment. I would say it's almost better to trade against the sentiment. But right now, the sentiment is 50 long, 50 short. People are like, I don't know what the heck we're going to do with oil. And I can tell you right now, if any of you that are following my, my energy inflation crisis right now, and I'm going to call it crisis, natural gas is over $5. So it's, it's 2.5 times now what it was in the spring. So again, we know that there's a lot of
transitory inflation you're talking about.
Yeah, it's transitory. Yeah, transitory. Yeah, don't get way to hit the hot buttons today, Todd. Transitory. And again, once again, speaking about transitory, I mentioned yesterday this PPI number coming in today is the price of goods and services that you and I pay. We know where the oil, basically the energy, because again, all energy follows oil. It is what it is. There's no ifs, ands, or buts. There's no debate about it. Oil is what drags all the energy prices around all over the place. Okay, it's the main driving factor. The political decision we made, canceling the pipeline, started us down this path, and now everything else is tracking. Again, we have no shortage whatsoever in natural gas. Prices are jacked up. They've acknowledged inflation, but again, the saying that it's just all transitory, we see it going away. The answer is where? Here's the core PPI. They've missed this, all year. Once again, it was supposed to come down to, again, I say come down, but again, 0.6 was still positive, came in at 0.7. Even the core number, higher than expected. So here's the thing. Doing absolutely nothing is, again, we are paying more and more and more and more and more. Gold hasn't reacted yet because right now the Fed is still on this, it's all transitory. It's going to go away. I hope. And it's like a bad trader. When you get in a bad position as a new trader, you're like, please God, have this come back again. I'll never do it again. And it comes down. You're like, oh my God, it's not there. It's like, and then you're making all the excuses. I feel like that's what the Fed is doing right now. This is absolutely ridiculous that they're doing nothing. And like I said, statements that have been made and seeing this, the longer this goes on, the faster we're going to have regime change in the United States, because this cannot continue to happen. And just basically telling people that it's going to go away, because remember, every time we're paying more and more and more and more, it puts us in a worse situation. We know the way that they stop this, right, is to raise interest rates. The second they start raising interest rates, the stock market is going to start collapsing and tanking. And then we run back into the same scenario we have when we've had two previous market crashes, where they suddenly start to see everything start crashing because now borrowing is more expensive because they have to cut off inflation. Layoffs start happening and all these other things. Because again, people aren't magically going to start getting paid less money because of inflation.
This is going on around the globe. I mean, this is kind of what.
Yeah, it's not just here. No, but again, we're kind of ahead of we're leading everybody, so it's going to hit us first. That and where we are in the economic cycle. I mean, we're like 5 or 6 years past where the longest streak of a bullish market has ever been anyway. So it's like, we talk about stacking the odds in your favor for a trade. It's the same thing. Inflation is one factor for a crash. The fact that we're 5 years or 6 years past the longest bull run ever, another factor that's involved.
Yeah, they're going to do. I mean, I think they're broadcasting it. I think they're broadcasting. They're going to start tapering, and now and they wavered a little bit, yes, this way, but they're going to start scaling back their purchases. But I don't think they're just going to shock the markets by just ripping off the Band-Aid.
Unfortunately, the way that at this stage right now, the people that are hurting the most is also the people that won the election for this president. So it's going to
Yeah,
become a political factor.
right.
The fact that
It will at some
Powell is
point.
up for kind of renewal or not renewal, and he's playing more of the political game. There's going to be a lot of changes, and then it's going to be a sudden shock because people are going to be extremely unhappy. Again, a market crash, I believe, is coming, and these numbers are also justifying it again. We know the labor market is bad, but they can't let inflation run wild. It's just one of those things. So,
Yeah.
again, this is one of those things that transitory is bad. And the reason I'm telling you this, guys, and again, we'll go back to oil in a second, but the inflation is in the market. For me, industry wise, this potentially this is leading into a red day today because again, we are seeing even more potential inflation. And again, it was supposed to end in July, supposed to end in August. Now we're in September. We're still paying more for every bit of goods. And again, both core and regular, both higher. So it's not just energy. So it's an issue. And again, here's what oil looks like today. Oil's approaching levels again where we have some selling coming in.
Yeah.
Question is are we gonna, are they gonna be able to hold back again? I mean, we've kind of hit this area 3 times. Yesterday for news that turned it around very sharply, and again, the news helped, but it exaggerated the move back to the downside. We have kind of, we have an area of buyers that have come in, and I would say right now the one good thing about the oil chart is we've had one touch here. You could say that this is a touch, maybe not. It hit it again, it based, and then hit it again. So they are beating this area of buyers up at 67, 65. If price is able to come back down again, now the big question is, will they hold next time? Or will we start hitting that 67-ish level? Now, the reason why I think it's probably, although we have sellers up top, again, red market will probably help turn this around a little bit. This is the European session, and again, obviously, it's just one direction. With people getting paid more money, they were also willing to pay a little bit more at the gas pump, right? And gas is down right now. It's a little bit cheaper because again, winter gas is cheaper than summer gas. But again, as this rises back up again, you can see this is a $2 move in one day. It will carry over and transition back at the pump eventually. You see these big spikes where it's $2 down and we drop 10 cents. Well, now it's $2 back up again. If we're all getting paid more money, why can't we pay $3 a gallon or $4 a gallon or $5 a gallon? So, it's kind of one of those things that, and again, remember, oil is considered, the main target of the administration right now. They're saying that the Fed needs to take more control over climate change. It's not really the Fed's mandate to do climate change. That's, what other, divisions should be doing.
That has actually creeped into just about everybody's mandate nowadays.
You got to say it's Delta and climate change. Those two things have to be in every single statement out there. Even if you're like an auto mechanic, you got to talk about both of them, right? Like I'm a yoga teacher, climate change and Delta. It's it doesn't matter what it is. Those two words can climb into everything. But I would say on a purely technical basis, oil is kind of setting up. It's having some issues. We've been in one direction. Look for some profit taking. 69, 65. It's been a level that's been tested at news with bad news. If the market all turns red today, again, I think that gives us the opportunity to drop down. What it's doing with the dollar CAD, though, again.
Wait. Before you do that, I just want to jump over to oil. Before we look at the CAD, I just want to point, at Nadex, I mean, this was incredible opportunity when you're looking at these shorter duration binary options. When you're getting, and Brian's mentioned his parabolic moves and parabolic retracements. Yesterday was quite a crazy day of that, but there was in a couple of hour time some great trading opportunity as oil was blasting through. On the shorter durations, you can see how many strikes that are out there for the shorter durations. It's opportunity. I mean, that's what you're looking for as a trader. The other thing I was going to point out is, I mean, these levels up above 69.30 and then down below, just below 67.80 that Brian's put up there. If we actually take a step back, and I'm going to shrink this down a little bit. I mean, if it does punch out of one of these regions, you can actually see. I'm going to duplicate this real quickly. You could see, where could it potentially break out to? I mean, could it, if it were to get through that 69.80 level, is there a chance that it could punch up to 70? Yeah, actually. I mean, it's just like it's 1, 2, 3 testing on the top and 1, 2, 3 testing on the bottom. Down below, duplicate, bring it down. It'd be down around closer towards 67. So don't be surprised. I mean, it's making some big moves. Short-term binary options, someplace to take a peek. If we start getting near one of these levels where we do know buyers and sellers have been coming in both below and above. So, all right, yeah, let's talk about where it is on the U.S. dollar.
Yeah, I mean, CAD
I mean,
dollar.
on the
This is
Canadian dollar. The
yeah, it's a
Canadian dollar.
combination. It's a combination of two things. So yesterday, if you were attending, we mentioned that we had Macklin speaking. I expected him to kind of talk about the difficulties that Canada was having. You know, again, Delta. We got to say climate change because oil is a big thing for them as well. And they also had the election. Again, a couple different factors, a little bit different. Again, a snap election is something we're not used to in the United States, but their political party is a little bit different up there. So, but what we did is we talked about news, and here was the news release, and you can see price went into it, and then immediately pushed away, went up about what are we talking about 45 pips. So again, a decent bit of movement, and then have some basing in the overnight, which you expect. And then really late last night, we started the retrace back down again. And what this is this is that Canadian strength, and the reason why is again, Canada's main export is oil. When oil prices rise, the Canadian dollar strength also increases. So we stomached all the bad news,
Yeah.
and the oil effect kind of took back over again. So we're seeing it continue to push down. And again, this was an area of interest. We knew we had buyers in there in the past. Again, it kind of took off, pushed it pretty deep, so it wasn't really a level, but you guys will know what this pattern looks like. I actually had a message last night from a student that was asking about the Harry Potter, so I'll just draw it here for the student. Hopefully they're watching again today. I think his name was Bob. If you're listening, I'll email you as soon as we're done today. But this is that Harry Potter pattern, guys. It's just a confirmation pattern. It's using an old level, and you guys have heard this before. I mean, I am not a support and resistance trader. I don't believe in it whatsoever, except to trap people. But again, you hear that sentence that started, that line that started there, that old support becomes new resistance and vice versa. For me, it's all about supply and demand, but you see the same effect that, old sellers become new buyers. Again, these used to be buyers that supported this, but when they run out, now all of a sudden they flip it around. Harry Potter is a continuation pattern. It pulled down at base, it pulled back up and grabbed that level and took off. And now it's, it's testing some of the levels over here. Now, this morning's data, right? It's great Canadian data. Right, their forecast was supposed to be 7.3 unemployment rate, dropped all the way to 7.1. That's a 0.4 difference. That's huge. And again, a couple other nations, the United States had that too, where it went past and went below. It was kind of playing catch up for the last reading, which was not good for everybody. But then they also had 30,000 more jobs in the right direction. So it's kind of a strong scenario. So right now, these two kind of wipe each other out. Although I would say, in reality, the dollar should get more strength from this, but we know that the Fed's inability to kind of do anything right now is kind of keeping the true dollar strength from coming in. Any other time, if we weren't in the middle of a pandemic, this type of PPI data would have jacked the dollar straight up in the air because it demands a reaction. But right now, they're kind of just, they got the blinders. So right now, the dollar Canadian story is going to be based off of oil today as we continue to push. Now, I would say, as far as Canadian levels that come in, you can see we had a very, very healthy rally up here where it's in, impulse correction, impulse correction, impulse correction, impulse correction. I mean, very textbook kind of move to the top side. I would expect there, and again, right now you can see that there's actually a level of basing right there with a touchdown. Again, that same type of confirmation, and that's what we're bouncing off of. We'll see what happens here. We got about 27 minutes before the U.S. trader comes online, and the dollar will start getting affected by the news that we saw earlier. Again, if the markets turn right now, the indices they're okay right now, although I know that there are levels. I'll show you those in a second. If they start to flip, that means that the market believes that this, the data today in PPI definitely demands a reaction for dollar strength and changing of interest rates sooner rather than later. Again, remember Bostic yesterday's, where is it? When tapering occurs, it is recommended to do it as soon as possible. Right. I don't know why I don't know why he has the first piece in there and doesn't say the second piece, because it's kind of like, what does that mean?
Because he kicked the can. He said he wasn't going to recommend it for the September meeting. So he was just kind of teeing that up to let people know he wasn't going to say that for the September meeting.
Right.
And kick the can down the road just a little bit. But
the way that I'm reading this. Yeah, and the way that I'm reading this right now is instead of doing it slow, it is recommended to do it as soon as possible. The second he pulls that trigger on tapering, I think he wants full tapering. I think that's what the statement is. And again, I'm not him, but making a statement of when it occurs, it needs to happen as soon as possible. It's kind of like it's like taper, bam.
Interesting, because she said the ECB is going to or might reduce some of their bond purchases. Okay.
Well, they changed it. I did find clarification about that yesterday.
But there was another statement down here. Be tapering. I'm like, wait, if you're reducing bond purchases, isn't that necessarily tapering?
So What they said is they are still keeping the same level of support in, but they are changing it around to the areas most in needs, and bonds was not the area that needed it. So
Oh,
what
they're
they're doing is that
allocating
they're
it.
reallocating it to kind of target where they need it the most. I've never seen that done before, but I will say this. If they change the focus and target it to where it really needs to be and it works, in 3 months, the ECB is going to be going crazy. They've already said, they've already made comments about in 3 more months, end of the year, start of this.
Right.
Everything they're saying right now is porting at December, end of year. If this targeting works for the next 3 months, watch out. Euro strength will be coming through the roof, and God knows what we'll be doing at that point.
So
So, yeah, it's set up. So again, I would look for a push down, and again,
good.
just so
It's
we
going
can
to be
get
a
out of
good
here.
trading season this fall and winter.
Yeah,
Let's get at it. I mean, I
yeah, yeah.
want to see some of this action, right?
Yep. And guys, just real quick on the indices, 10 seconds more, and then so I can take it over again. Watch out for the ES. Again, ES is up at that 4,500 level again. It's already put in a lower high right now, and it's hit an area where sellers have stepped in the past. NQ is actually in a similar area, but a little bit harder of an area to draw there, but similar. YM is also up in an area. We put lower
Same
highs
one.
in the overnight, as well as there was that gap yesterday. And Russell is also hitting another area
Exact.
where we fit the same thing. So they're all starting to turn. Having PPI this high, it's kind of like if traders are feeling that PPI is too high, that leads us into a red Friday. I'd love to say that, hey, it's Feel Good Friday day, but right now, based off the technical data,
Starting to
and if
turn.
you look at the way that it should drive the economy right now, it should push everything red today. So just be cautious. Again, drop it to the 15 minutes and look to see if you have any opening levels. That's all I got.
Excellent. No, listen, we covered a lot today, even on a day that you would think is kind of slow, but there is opportunities out there, whether it's in the commodities, whether it's in the currencies, and it certainly translates into the indices. So with that, if you got any questions for Nadex, please email us customerservice@nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. Even if it's just to get clarity on that whole Harry Potter thing, which I really love. I use that all the time now. And that's what we've got for today. Oil definitely in play with issues around supply and how the markets are interpreting that. That is in turn impacting the Canadian dollar. And then with some of the PPI numbers, we do see some inflation creeping in. It's definitely came in a little higher than expected, and we'll see how the retail trader in the U.S. interprets that when the equity markets open in 23 minutes. Brian and I will catch you again on Monday. I want to wish everyone a very good weekend and good luck in the markets.